Hi there, J. Scott McMillan from Crypto for the Rest of Us. And I'm breaking into your live TV or to your live YouTube viewing to give you an update on the crypto crash, which it's maybe being deemed. Now, if you've been in the crypto space, you know, as well as I do, that crypto isn't crashing down to zero, but it's taken a hit. And it's taken a hit because two of our favorite centralized exchanges are having a battle. They're battling out. We got Z of Binance, and we got Sam Bankman-Fried, SBF, for FTX. And they're battling it out, and it looks like FTX is losing the battle right now, but we're going to see. So I wanted to just read the highlights of a little bit of news for us. Oop, hold on. Get her back here. All right. Let's get rid of this. All right, I just want to scroll down here and read a little bit of this because it was interesting. Because we're talking about the Securities and Exchange Commission and the Justice Department, and they've been investigating FTX following its sudden implosion this week. A person familiar with the matter said. Now, that's a little misleading. They've actually been looking into FTX for months now, and part of it is their FTT token and whether that's a security or not. So there's quite a bit of information that they're gathering about this, but this is bringing lots of attention, lots of news to it. So it says staff at the two law enforcement agencies were in close contact Wednesday. The Justice Department prosecutes criminal violations such as fraud, while the SEC enforces civil investor protection laws. So both the SEC, which is looking in to see if all of cryptocurrencies are securities and they should be regulated as such or not. And the Justice Department is looking in if there's any criminal actions going on. And right now the heat is on SBF in FTX for sure. It says the SEC's investigation, which has been continuing for months, is focused on the company's US subsidiary FTX.US, which lists dozens of crypto tokens. Like all exchanges do, agency officials believe that some of these assets, as well as FTX lending product, might constitute securities that under U.S. law should be registered with the SEC before being sold to investors. If that is the case, then the company's handling of customer assets might also violate laws governing U.S. exchanges. So what are these crypto exchanges? Are these any type of exchanges in the financial world? One of the problems is that the SEC and for the most part, regulators have not defined and put into law what the laws are around these regulations. And so there is no clear law to follow. So how can they enforce these laws when they haven't put laws into place for crypto? And I'm going to read on and we'll look in more of what the issue is here with Gary Gensler and the SEC and the Justice Department and the laws in crypto, because it's very vague still. As part of the expanded investigations, SEC officials have contacted company lawyers to request more documents pertaining to the relationship between FTX US and the parent company based in the Caribbean, the Bahamas. That's where FBS is. They have also sought information about ties between FTX's crypto exchange and its founders trading firm, Alameda Research. So Alameda Research is owned partially or all by, I think, Sam Bankman-Fried. I'm not sure exactly how tied it is to FTX. It's tied. There's obviously connections there. And this is what I think a lot of the confusion is about, and potentially where SBF might be in trouble, because the shenanigans that might have been going on with the funds in Alameda, and then also FTX, and their FTT token. So this token, which is like a lot of exchanges, they all have tokens. So this isn't just FTX being a bad actor here with a token that could be a security. So that's one thing. Frankly, right now, I'm not sure that has anything to do with this. This is like piling on because this has been going on for a long time. And this is a Wall Street Journal article that we're looking at here. And it's just bringing all this in. But that's what happens because when all hell breaks loose and now you're the focus of attention, people start digging into your past and they start throwing all these things together. So it says, even before FTX's troubles this week, pressure was growing on U.S. regulators to wrangle crypto firms into compliance with investor protection laws. Cryptocurrencies have shed 2/3 of their value over the past year, more than $2 trillion across the market, in a series of token issuers, lending platforms, and investment vehicle collapses. This is the whole crypto space. And they're saying that, yeah, in this year, a lot of things have happened. We've had the Terra Luna, we've had the Three Arrows Capital, and the Celsius debacle, and this has rocked the crypto world for sure. But in my opinion, it also shows how resilient the crypto market is because it hasn't crashed to zero, the whole market. Bitcoin and Ethereum being the two largest cryptocurrencies that really carry the market have been shaken, but they're not going to crash to zero. They're not going down to zero. So the crypto market is resilient, but it's volatile and it takes hits just like any other market does. So again, I think they're piling on here in this article because this has been going on for a long time. It's nothing new. So Mr. Gensler has repeatedly demanded that trading platforms such as FTX register with his agency and follow the same regulations that apply to traditional stock exchanges. Hold on there, Mr. Gensler. We got to stop right there. No, you can't regulate crypto exactly like traditional finance, and that is what everyone in the crypto industry is up in arms about. And they haven't done it. They haven't enacted laws. They haven't said crypto is exactly like traditional finance and in the equity market. So what's the big hoopla? Yeah, he's been asking that. He's saying you should register as a security. They're not securities necessarily, and they have to look at crypto separately. And this is what we're all worked up about in the crypto space because they can't just say it's a security. Now, if they're going to look at each individual case and make a determination, okay. And if that becomes law, okay. But they haven't. And it's so frustrating for articles like this to come out and basically say, hey, crypto, why aren't you registering as a security? Because one, we don't believe we are. And two, there's no law that said we had to. So how can you enforce this? So it is frustrating. This is another example of the SEC just piling on and trying to push their agenda. And we can't stand for that. We really can't. And again, I just wanted to bring this up because I'm frustrated that the Wall Street Journal and the press is just piling on everything. When in reality, let's just stick to what's going on right now between potentially Binance and FTX and Alameda Research and their FTT token. That's what's going on right now. No reason to pile on all this other stuff. So Mr. Gensler, like his Republican-appointed predecessor, said that most crypto tokens meet the definition of a security, an investment made with the expectation of profits based on the efforts of a third party. Well, then make it law. And until you make it law, we're going to be in this turmoil. And it's not fair for anyone. Gensler, make it law or shut up and get out. How do I really feel? The designation comes with significant requirements. Issuers of securities must file regular disclosures about their financial condition and business. Exchanges are required to publicly report transaction data and maintain robust safeguards against market manipulation. We're talking about crypto exchanges here. They aren't exactly like regular exchanges in traditional finance. Until you rule that as law, I know I'm repeating myself, but the article keeps piling on. Brokers are required to direct their investors' buy and sell orders to a trading venue that offers a good price for a security, and they must keep their customer assets separate from their own in the event of bankruptcy. Okay, I get it. And this is potentially what we're afraid of, is that FTX or Alameda Research is going to be insolvent, and then customers' funds will be frozen and they'll be out of luck. And this is what we saw back with the Three Arrows Capital, the Celsius issue of these CeFi companies that were doing stuff behind the scenes that not everybody could see, and they became insolvent when the crypto markets went down and they couldn't come up with their collateral and they were liquidated. And that's not exactly what's happening here, but there's worry in the market, and there's worry out there that this could happen with FTX, and they're one of the largest crypto exchanges, centralized exchanges. Now, I might add at this point, we're mostly talking about big centralized exchanges in crypto. We're not talking about DeFi or decentralized exchanges. That is at the heart of true decentralized, permissionless, trustless crypto world. So DeFi is doing just fine. And in fact, as an investor, I've got investments in Bitcoin and Ethereum, and I dollar cost average into it, and I don't worry about the price going up and down. So right now, I'm not upset. I'm not worried that the crypto market is going down right now. It's bouncing around because there are actors within the industry that either aren't playing fair or by all the, well, I was going to say by the rules. Unfortunately, there aren't really many rules and regulations, and it's a big topic of concern. We talked about it just last Friday on Crypto Talk with Brianna and Scott. We had Dr. Scott Herman on. We were talking just about this, about Sam Bankman-Fried, who had put out a document that he called a blueprint for regulation. It was nothing formal. It was his views on what regulations should be. And there was a lot of pushback from traditional crypto people in the crypto market that didn't like what Sam Bankman-Fried was suggesting. Now, this weekend, when it looked like there was turmoil and that Binance was going to sell the FTT tokens that they had, there was speculation that CZ, the head of Binance, was disgruntled and he wasn't happy about Sam Bankman-Fried's stance on some of these regulations. In fact, he tweeted just that. And so there was this fighting going on. And then all of a sudden we hear that Binance is offering to buy FTX. So there's a lot of this turmoil, and that's what's caused the markets to shake up. So as I was doing research on this article came up, and again, it started to talk about what was happening right now with Sam Bankman-Fried and the token and Binance, but then it just devolved into a basic regulation type article that crypto needs to be regulated, blah, blah, blah. This is the Wall Street Journal, although I thought it would be respectable and give the side of the crypto universe too. And right now it's really heavily leaning towards traditional finance and the SEC. It says to comply with U.S. law, Mr. Gensler says that crypto platforms would have to segregate their broker-like activities from their exchange-like functions, but this would likely cut into their ability to profit from investors' trades. Okay, again, you're speculating, you don't necessarily know, and if you do, why are you not putting this out as de facto statements instead of just this blah blah leakage to the press? You haven't put any laws into place, you haven't got definitive regulations in place, and yet you're just throwing this out. It's not helping the crypto market, the traditional financial market, or anybody in between, Mr. Gensler. It says, and the intermediaries, so that many of whom have hundreds of tokens on them, are not compliant with securities laws and non-compliant with time-tested public policies. We know that they're different. We're asking you to regulate these different than traditional finance. And if you really are serious about just making it exactly the same as the stock market, we're going to push back, and we're going to push back really hard. Right now, you've just left us all up in the air, Mr. Gensler. We would like some, not just guidance, we would like to know, what is the law going to be? And if you're going to continue to skirt that issue, then leave us alone and get out of our way and let us innovate. And we'll take care of ourselves. We will self-regulate, because what you may or may not know is that crypto is regulated by the blockchain. You cannot do a lot of these underhanded things that happens with non-crypto based centralized exchanges in traditional finance, and even companies like FTX that are not purely decentralized. They're a regulated company, but they're dealing in crypto, which is not regulated. And so there's all sorts of shenanigans and deals that go on behind the scenes that if this was on the blockchain, if all of their transactions were on the blockchain, everyone could see it because the blockchain is transparent. So it's frustrating to see people that don't understand the blockchain that are trying to say this stuff needs to be secured and these are bad actors. There may be some bad actors out there that are not purely decentralized. Now, the only issue that I see with decentralized is that they can get hacked. This is code. The good news is that you can't play shenanigans. The code tells you how much you can invest and if you're going to get liquidated or not. The rules are right in before you even put your crypto assets into play. Whereas on the CeFi, you've got people making deals behind people's backs, and this is what gets us into trouble. So let me go on here. It says, instead, FTX founder Sam Bankman-Fried has spent tens of millions of dollars on political campaigns and much of his own time attempting to persuade U.S. lawmakers to change the status that the SEC enforces. Rival Coinbase has denied that it lists securities on its platform and repeatedly criticized Mr. Gensler's approach towards crypto. Exactly what I just said. That depends on how you define regulations. I would define regulations as written down rules and laws that if you break them, they're clear and you get busted. Right now, there are no regulations. There's no laws passed. And so people are doing whatever they want, including on the side of the crypto, but also on the side of the SEC. They're just firing arrows at anybody they think that they can nail without having clear regulations and laws in place. And that's what has to stop. So a lot of people are saying, why do we want to push regulation right now? Why can't we wait until the industry grows up some more? That's true, but if we do that, we're going to see a lot of pain like we're seeing right now, because without clear rules and regulations and laws that enforce these things, people are going to do what they're going to do. It isn't helping anyone. Now, on the purely decentralized side, the DeFi protocols, what I want to say is they're working fine. Definitely do not want any regulations in the back end of crypto in the DeFi world. What we can use, and this is what Sam Bankman-Fried was trying to say in his blueprint, was that we do welcome regulations on that front end before you get into pure decentralized crypto. The front ends, the GUIs, people that interact like FTX and the centralized exchanges that take people's fiat currency and transform it into crypto. Those all should be regulated. They should. And I don't think anybody in the crypto world should have a problem with that, because that's all on the front end side that governments have to regulate what happens to our money and how it gets into crypto. Once it's into crypto, and now you're in the decentralized world, you're using self-custody wallets like MetaMask to connect to these smart contract platforms, traditional DeFi, swapping, trading coins, investing, getting yield from contracts that apply us interest based on the fees that we earned as being liquidity providers. And that world is working fine. So we don't necessarily need any DeFi regulations right now. But this stuff that's happening on the front side, decentralized exchanges, they do need to be regulated. And now we can see this is why the problems that we get into when we don't have clear rules and regulations. So this has been J. Scott McMillan on a quick update about the FTX situation. More to come, because this particular video was really about what the ACC now is trying to pile on in this Wall Street Journal article. But there's lots more to come. This is evolving minute by minute, day by day, and it really is one of the bigger events in crypto. And so I want to stay on top of this and let you guys know. So we'll see you next time. Thanks. Bye.